Picture this. A fake identity gets approved by a bank's KYC process. It looks perfect. It has an ID, address, even a selfie. But it's completely AI generated, and within hours it's used to open dozens of mule accounts all across different platforms, structure transactions across crypto wallets, and disappear into a decentralized mixer. And here's the twist. It wasn't a criminal mastermind who pulled it off, it was an AI model, built and run by someone with no more technical skill than it takes to ask ChatGPT a question. In this video, we're diving into how criminals are already using AI to launder money in 2025, real-world techniques that blend deepfakes, crypto, and smart contracts, and also what it all means for the future of AML. So if you work in AML or just want to understand what the next wave of financial crime looks like, stick around. I'm Kevin. I've been in risk and compliance for over 15 years. From Head of Audit in banking in New York to Chief Risk and Compliance Officer at a fintech in Europe. I've dealt with the pain points and learned what really works to both stay compliant and on top of the risk. Earlier this year, DNB, which is the largest bank in Norway with offices across the world, became the target of a highly sophisticated deepfake fraud attempt. The scam began with WhatsApp messages sent to senior staff at DNB's offices in Singapore and London. These messages appeared to come from the CFO of the bank, who together with the CEO was inviting them to an online meeting about a new investment opportunity. Millions of Singapore dollars were about to be transferred.
All for your participation today. And congratulations on your nomination as project leader. You are instructed to initiate the capital deposits tomorrow morning in Singapore via DNB's Singapore branch. Please transfer 881,780 Singapore dollars and 1,970,626 Singapore dollars, and will provide you by tomorrow with the necessary document. This marks the official start of the integration of this crucial project. All participants are reminded to follow their payment schedules as discussed.
The setting, the tone, the language, the faces was familiar. There were a few small video glitches, but nothing unusual for a cross-border video call. But here's the thing, none of it was real. Neither the CEO nor the CFO had joined the meeting. The entire call was a deepfake, built using publicly available video and audio such as interviews, speeches, and media clips. The attackers had pasted it all together and used AI to generate a convincing live video feed with cloned voices and synchronized facial movements. Fortunately though, the bank was already onto them. WhatsApp typically isn't the communication tool of choice, and urgent CFO requests isn't exactly protocol. So the cybersecurity team at DNB was notified. The meeting went ahead, mainly to observe and study how the fraud worked. But no money was transferred and the incident was caught before any damage was done. But this case shows just how far these scams have come. With nothing more than publicly available content and readily available AI tools, attackers can now create deepfake video calls that look and sound almost indistinguishable from reality, live in real time and aimed at high-value target. And honestly, if you weren't looking for it, you probably wouldn't have noticed anything wrong. So criminals are now using AI to generate fake IDs, passports, and even live video of themselves for onboarding. According to a recent report, deepfake attacks in the financial sector have skyrocketed 2,137% in just the last 3 years. So a few years ago, it was basically a rounding error. But today, 1 in every 15 fraud attempts involves a deepfake. So deepfake comes in two main flavors. So you have presentation attacks where fraudsters show a deepfake video on screen or even wear a mask to trick identity checks. And then you have injection attacks, which is a little sneakier. Here, a deepfake video or audio is injected directly into systems during onboarding or KYC, which bypasses camera and tricks your software. And the scary part is that traditional fraud tools often miss these, and only 22% of banks and fintechs are using AI-powered fraud detection right now. So while fraudsters are using AI to scale up attacks, most businesses are still using tools from 5 years ago to try to stop them. The message here is clear. This isn't just a tech problem, it's a trust problem. And when a fake video can make you doubt whether your CEO is real, you need more than passwords and gut instinct to protect your systems. And that's why experts are calling for multi-layered protection. So you have AI detection, biometrics, behavior tracking, and continuous monitoring, working together, not just to stop fraud, but to stay one step ahead of it. And this goes beyond just faking one person. AI is now being used to generate entire synthetic profiles, full identities with SSNs, addresses, social media activity, and even credit histories. These synthetic customers open bank accounts, apply for small loans, slowly build trust, and then set off an explosion of money laundering transactions. This has become a major pain point for banks in the US, especially fintechs with more automated onboarding. Then you have smurfing automated by AI. So smurfing or structuring is a process of breaking up large transactions into smaller ones to avoid detection. Criminals now use AI to simulate transaction patterns that mimic legitimate users, and these bots can adjust amounts, pick optimal times of day, and avoid flagged corridors or jurisdictions. They're even smart enough to pause activity if they detect an alert or suspicious response. Recruiting mules with AI. So, social engineering isn't new, but AI has changed the scale. Imagine receiving a WhatsApp message from someone who sounds just like your old coworker, asking if you want to make some quick cash by receiving a few transactions. Behind the message, a fine-tuned large language model trained on phishing tactics, corporate lingo, and maybe even your social media history. So why is this a game changer for AML teams? Most banks still rely on basic rule-based transaction monitoring. For instance, flag any transaction that is over $10,000 or watch for more than X wire transfers in 24 hours. But criminals know these rules. They test them, and AI lets them do it faster, like a hacker stress testing a bank's system until it breaks. And then you have the speed gap. So when banks detect something suspicious, it goes into a review queue. So a human might look into it in the next 2 or 3 days. Meanwhile, the criminal and the criminal's AI is already 3 steps ahead, moving money through 15 wallets and into a decentralized exchange before you even assign the case. So what can banks do either with or without AI? Without AI, the fundamentals still matter. So you don't need an AI lab to make progress. There are things banks should be doing right now. These could be things like strengthen the KYC validation, use biometric matching and not just document uploads, and cross-check data with external databases. Social security numbers, utility bills, public records, just actually doing that job. Also, you can improve human review quality. So red flag fatigue is obviously real, but invest in training analysts to spot context, not just rules, and create feedback loops between investigations and monitoring rules. And obviously collaborate and share information. So in the US, Section 314B allows banks to share info about suspicious customers, but many still don't use it because it's manual and there's too much bureaucracy involved, and that's a missed opportunity. But with AI, you can have more of a level playing field. So if you do have access to AI tools, here's what can make a difference. You can have behavioral pattern detection. So rather than static rules, these models learn what normal looks like over time. Once something deviates, it flags it, even if it's small. Graph and network analysis. And this is big. So imagine if instead of looking at individual transactions, Your system looked at relationships. So who are your customers connected to? Are they part of a larger ring or a larger family or group? Or are they linked to mule accounts at other banks? Also, you can have AI-assisted SAR writing. So some banks are now using large language models to help draft suspicious activity reports. It doesn't necessarily write it for you, but it gives you a structured summary and a narrative suggestion based on the case file. And this is a huge time saver when done right. Some institutions are piloting preemptive scoring. So instead of waiting for a customer to act, they assign risk based on behavior patterns and proactively monitor or de-risk them. This could obviously raise some ethical questions, which brings us to the final section. So some ethical and regulatory challenges are, for instance, black box models. So one big issue is explainability. Regulators such as the OCC or FinCEN or New York State, they're clear. If you can't explain why your AI flagged something, you might have a problem. So governance matters. And that means documenting training data, testing for bias, and keeping audit trails. And regulation hasn't really caught up yet. So as of 2025, there's no comprehensive regulation on AI in the US, but it's coming. So between the EU's AI Act and draft bills in Congress, banks will be expected to demonstrate responsible AI use, especially in AML. So let's wrap this up. AI is changing financial crime. Criminals are using it to move faster, hide better, and automate more. But banks can use AI too to detect patterns, analyze networks, and make compliance smarter. Whether you're at a big bank, a fintech, or just interested in the future of AML, now is the time to understand how these tools work before your adversaries get too far ahead. So if you like this video, please subscribe, and if you have any questions or comments, please feel free to add them below. I'm Kevin. Thanks.